Well, here it goes again. Real estate just continues to rise in good old California. It's pretty interesting to see how the tariffs will impact our California real estate market. All of our properties, well, our new construction properties, will likely have the greatest impact by seeing maybe a $4,900 to a $10,000 cost increase because of the tariffs that are supposed to go in effect. Now, according to CNBC, which is where I've pulled this information from, lumber is going to cause us to be more costly, right? Drywall is going to go up in expenses, and home appliances. Why is that? Because it's coming from Canada, Mexico, or China. And the new tariffs could increase our builder costs anywhere from $7,500 to $10,000 per home, says Rob Dietz, and he is the chief economist of the National Association of Home Builders. So, what are we going to do with these tariffs? How are they ultimately going to impact our real estate market? Well, everything's just going to be more money. And more money here in California just keeps getting, well, more and more expensive, right? Construction costs will go up. Tariffs on materials like steel and aluminum, lumber and appliances, well, all going up. Developers may slow down their new housing projects or pass these costs on to our buyers. Oh my gosh, the buyers are going to pay more. And of course, the increased remodeling expenses could discourage our homeowners from doing any upgrades. So I don't know. What do you think? So far, I'm hearing a slowing housing economy. So, what about supply chain disruptions? If the tariffs impact imports from China and Canada or Mexico, it could delay our construction projects. Just what we need, things to slow down in real estate and construction. I mean, with all the wildfires that just happened, we need things to build quickly. Is that going to be possible now with these tariffs? Well, let's continue to learn more. Home builders may struggle with material shortages, leading to fewer new homes available. Oh my gosh, there it goes again. That inventory going down, which means prices going up. And oh, yes, rising interest rates with and inflation pressures, right? So tariffs can contribute to the inflation, prompting, of course, our lovely Federal Reserve to raise the interest rates. We just thought they were coming down, and it's not looking like it. Higher mortgage rates, well, we know what that does. It just makes home ownership even less affordable. And then, of course, our investors could potentially pull back from the real estate market, which then affects, yes, the demand. So, what should we do? Well, if it doesn't just have an impact here in California, just imagine what it's going to do to the foreign investment market, right? California sees high international investments, particularly from Asia. I'm currently doing a transaction, and the buyers are working diligently to get their funds approved to be able to close their loan with their lender, and that's not happening. So what's going on? Yes, that will slow down even more. Oh, what am I going to do with our real estate market? Trade wars on tariffs could discourage foreign buyers from even investing. I think even dealing with their lending guidelines, they may not want to invest in us at all. Is that good for the real estate market here? Heck no, it isn't. And last and not least, the potential job market shifts, right? So, tariffs on goods from key trade partners can hurt our California industry. Tech, agriculture, manufacturing, and shipping all could see job losses in these sectors, which then what happens again? Our demand gets impacted. And home values could be affected in these areas. I mean, the tariffs, thankfully, have been delayed so far, but I don't see how they're helping us yet. From what everyone's saying out there, I'd love to hear your feedback on it because the reality is we're just seeing everything's going to be more money, and then more money means less demand because people are just getting priced out, right? Lumber's going to continue to rise. Everything is just looking very dismal for the real estate market. I was talking with one of my lender partners earlier today and I asked him, what do you think? How do you think our market's going to shift? And I will just tell you, he is one of my smartest lender partners that I work with, and I trust his opinion. And he said, we are just going to continue to press forward in a very challenging real estate market here, right? So let's see a little bit of what we've got here. A stable and affordable supply of lumber is critically important for our industry to address the country's housing supply crisis, wrote Ken Gear. He's the CEO of the LBA, right? The domestic lumber industry cannot meet current demand. So guess what? We can applaud President Trump for exploring opportunities to increase domestic supply as a long-term solution. Well, are these tariffs going to increase or is it going to decrease? To me, I see nothing but money, 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 and more money. And so, what do our young first time home buyers do? Well, we shall see. Maybe they just tap out and not buy homes. Is that what we really want for our young first time home buyers? Not at all, right? Let's see, what else do we have here? We've had a high, I will share this personal experience with me. I, during COVID-19, had to do a termite clearance on my property and clear all the termite issues on my property because I was pulling out some money for a project I was working on. And when I did that, my termite guy, actually, not even my termite guy, my painter came to me and he said, Lori, I can replace that lumber for you, but just that piece of lumber, and this was 5 years ago, was over $1,000. I could only imagine what it costs today. I mean, lumber is challenging. So beyond the lumber, like what does the landscape look like for our home buyers? Well, buyers are going to have to be willing to pay these existing prices, these existing raising, moving interest rates. They're always moving all over the place. Well, costs for home construction will certainly rise. So do you want a fixer-upper on the market right now? Heck no, it's too expensive to buy a fixer. You may as well buy new construction. Well, what's going to happen with the new construction? Well, it's going to be about 10K more, they say, because it's new construction. So where do you win in this? You get a home, you get to stay there, you have a long-term tenancy, and at some point you pray the interest rates come down, so you might possibly be able to do a reasonable refinance into a shorter term loan would be my recommendation, not a longer term loan. The market is going to continue to shift. It's going to continue to inflate. The prices will continue to rise, which only means once you own that home, your equity is going up, up, up. And that is a win for you as a homeowner. Is it a win for those that don't have a home? Not at all. So why would you hold off on buying a house? Just get out there and purchase that property. The sooner, the better. You get a head start on building your personal equity and wealth, right? It's just so much opportunity out there. I'll end with this, right? We're hearing so much about Trump and everything he's doing and the administration and all that they're up to. And home costs for home construction will continue to rise. So if you've got stock in Home Depot, you might want to hold on, right? Or maybe sell. I don't know. I'm not a stock advisor. I'm not going to tell you what to do one way or another. But it sounds like Home Depot is going to be kind of slow for the next year or two due to all these tariffs that are supposedly running down the line for us. And so, will our tariffs help us? Will the tariffs continue to do what we need them to do for the economy? Will it bring in money or will it just cost us more money? That is the big question for all of us to consider. I would just encourage you to check out episode 86. We have so much to say there, and it is right up your alley in real estate tips.